It's Sunday, the 13th of January 2019. It's been a pretty constructive couple of weeks for the gold price. I think the last video I put up was on the 26th of December. We're trading about 1265 then, and it's moved up nicely. Just touched 1300 briefly, or 1298 there. Exact area you'd expect the market to pause here. I made the point in the last video that was kind of the breakdown that we had in June. And that's where I'd expect the market to take a break again. It's also where this previous uptrend is coming in. Often you see these when you've broken an uptrend, when it comes back and tries to re-enter that trend, you'll see the market pause. It's also a point if you're trading, this is kind of a double bottom here with that 1235, 1240 level as the breakout. You'd expect a move, sort of a measured move from that 1180 to 1240, so a $60 move, you'd kind of expect that on the way up as well. So that's all of this is pretty technically pretty normal sort of action, and I think it's paused nicely here. I've been trading within that sort of 1280 to 1300 range for the last 6 days, and I'm liking these sort of a little bit of buying pressure keep coming in there, even when we had the really strong jobs number, US jobs number that came out on a week and a half ago. That market sold off pretty hard, but then you saw that being bought. Typically, those job numbers have usually been turning points, and all this I think is related to some of the stuff that's been coming out of the Federal Reserve. I've got this sort of article here that's talking about Fed will be patient. I think the Fed has really sort of buckled under market pressure here. And I made that point in a couple of videos in December that the market was really testing the Fed, and I think it's pretty clear now that they're not going to be raising interest rates for at least the next 2 quarters probably. So that's, well, you can't be sure, but it seems that they've really backtracked on any of their previously sort of hawkish statements, and Powell has been shown to be pretty similar to the previous Fed chairs. And that was one of the things I think in the last video. If I bring up the S&P 500 chart, I think I said in the last video I was expecting a bounce, and it might be a pretty severe bounce given how bearish sentiment was, and that was exactly what we saw the day after. We had a move up. I think it was about 4 or 5%, one of the bigger moves ever in the S&P on the upside, and but it's that actions continued and it's sort of, I guess, accentuated by the low volume sort of period around Christmas, New Year, that those moves can be a bit bigger than they would be in otherwise normal markets. But we've really come back now, and testing this 2600 level on the S&P again is exactly what you'd expect from a technical basis. That consolidation zone that had been forming for almost a year, when it breaks, you often will see a retest there, and we've seen that perfectly now. So the market's really trying to, I guess, find some impetus to keep going higher. And the Fed's been given the medicine the market needed for the last couple of weeks to soothe nerves a little bit about raising interest rates. And but now we're sort of, I'm not sure what comes next. My feeling is that this is, even though they've said they're not going to raise interest rates, or not in as many words, but they have sort of intimated they're not going to be raising interest rates anytime soon, the pressure on the market and the sort of the damage done to the market is too severe, and now the bias is for selling these moves. And I think this zone would be where you'd expect that to happen. So I'm expecting that we start to see a bit of a sell-off here again. Maybe we don't go down immediately like with that sort of speed, but I think enough technical damage has been done here that the market goes down and continues to move down, regardless of if they raise interest rates or not. So then you're going to start to see if the market can. I know we've still got the quantitative tightening going on, which from what I've read is for every 4 months of quantitative tightening, about $200 billion US. It's said that that's equivalent to a 0.25% rate hike. So you've still got that going on in the background, and that's going to put pressure on the sort of fundamentals of the market as well. So all of this sort of the US dollar should not be positive in this sort of environment. And we've seen that to start turning over in the last week or two as well. You can see it sort of formed a bit of a top there, and now trending downwards. And it looks like a pretty significant type of topping pattern as well. And I think with the Fed backing off on interest rate rises, that's obviously what we're seeing, why we're seeing the dollar move down. So at the same time, obviously the Australian dollars benefited slightly from that in the last week. It had a massive down day on just when markets started resuming trading after New Year's, and sold off I think about 3 or 4%. One of the biggest moves seen in the currency for some time. I think probably in a couple of years when I've watched it, it was down heavily, and that after it broke that 70 cent level, which I talked about as being crucial, that's been a line in the sand for some time. Since the financial crisis, 70 cents has been the bottom. So it fell through there, and I think maybe there was some, illiquid markets as well, accentuating some of these effects, but it really crunched lower before. That was sort of a buying opportunity there, I guess. But I think fundamentally the currency is still very weak, and I expect even if the US dollar is selling off, that the Australian economic data is going to continue to weaken. And I think if I was playing currencies, this would be an ideal shorting opportunity about now sometime. Had that sort of bounce, but this is not. I think this is technically driven and kind of just maybe it's sort of algorithmic trading as well. But the general risk on sentiment means that the Australian dollar tends to get a bid, and that's so the Fed's kind of helped that there. But the fundamentals of the economy are weak, and I think it will continue to weaken, and that feeds into the Australian dollar gold chart, which when the currency fell on that morning on January 2nd, we had a peak in the Australian dollar gold price to a new all-time high. I think it got up almost up to 1900, but it was kind of in a when the gold market was closed temporarily and the currency was falling and the Japanese markets opened. But I thought when I saw that move and it was up sort of almost 4%, I think, I thought that was probably likely to be a short-term peak in the gold price, and that's exactly what it was. Typically, when you're seeing sort of a rush into something like the Japanese yen and the falling Australian dollar and the gold price going up at the same time, that's exactly the scenario I remember from Brexit in here, and also on the Trump presidential election day. Obviously, the market turned more positive. The S&P turned more positive after that. But that sort of those factors tend to be sort of mark short-term peaks in the gold price in Australian dollars. But still, it's trading pretty healthily at 17.80, and that's extremely good profit margins for a lot of the gold producers. So I think this is it's representing a pretty good buying opportunity for some of those Australian gold stocks again. Some of the bigger names have had decent runs, but some of the mid caps I think are still good value. And we have seen good moves in stuff like Dacian Gold's a stock that I've talked about a few times, and that's been up sort of 20-25% in the last 2 or 3 weeks. So I'm pretty positive. Australian dollar gold, I think it's a good time to buy some of those stocks again in the next couple of days. But I expect also we've seen the S&P, the ASX 200 come back a little bit with the sort of that risk-on sentiment again, and I think that's probably a decent shorting opportunity here as well. Just rallying on nothing from my perspective. I think this is, I don't see any real value in this move, but maybe it can continue for a few more days. But I think the general setup across markets is for them to continue to go down after this short little rally that we've seen. So all in all, I think that's a pretty good setup for gold, and particularly Australian dollar gold. I think is going to do well here. US dollar gold price looks like it's poised for another leg higher. I expect this range to be resolved in the next 2 days, probably next 2 to 3 days. You typically wouldn't see a sort of a basing sort of a stagnation like this for more than a week and a half or so before we get a resolution. 1300 probably will still be some reasonably significant resistance there. So if that move, we've got to wait for that move to resolve to the upside or downside. But at the moment, I think if you're trading with the trend, this looks like a pretty positive chart, and I think it's poised for more upside. I think the probability is a breakout toward the upside, particularly with that, the Fed backing off and US markets in a sort of a perilous position, and I don't see that they're going to be able to keep going through 2600 on the S&P um, without falling back. So that's where I see things at the moment, and some of the stocks that I'm trading are same sort of companies. That Australian dollar gold stocks, I think, are my bias still. But if we continue to see a gold price move, typically the money starts to filter down through the ranks of gold stocks, goes to those large caps first, then the mid caps, and then you'll start to see some of the juniors and explorers start to move. So if you're bullish on the Australian dollar gold price in particular, it might be a reasonable time to get set in some of those companies that have slightly marginal resources, slightly higher cost resources, and that's if we look back at what happened in 2016, it wasn't until maybe probably May, June when some of the money really started to come into those companies. And it was even after the gold market had peaked, I think, in around that sort of July to September period. Some of those small juniors were still running. Obviously, you've got to pick good teams, good management teams, and stocks with good fundamentals as well. You don't want to be trading the most illiquid juniors and 1 cent stocks, but I think there's a good opportunity to start doing some research on the companies that are, have slightly marginal resources and are a bit underappreciated by the market. There's been, a lack of money flowing into those companies for the last year, and I think, you're going to start to see if the gold market starts to keep moving, money will come into them. So that's where I'm looking a little bit now, trying to be a bit ahead of the game, and that's where you can make really good money in the gold market if you can see those opportunities forming and get in ahead of the herd. So that's where I'm looking over the next couple of weeks.